Let us break down what actually makes up that 50%. We will use 180,000 single-family rental in Indianapolis, renting for $1,600 a month as our example. That is $19,200 a year in gross rent. Property taxes. Indianapolis runs about 1.1% of assessed value. On a 180,000 a property, that is roughly 1,980 a year or 165 a month. This is usually your single largest operating expense. In Texas, this could be $3,600 a year. In Alabama, it might be $720. Always look up the actual tax bill. Insurance, landlord, DP3 policies. For a $180,000 property in Indiana, run about $1,200 to $1,500 a year. Call it $110 this month. Add $15 to $20 a month for an umbrella policy if you own multiple properties. Vacancy. Industry standard estimate is 8% of gross rent. That is $128 a month or $1,536 a year. This covers the gap between tenants, turnover costs, and the occasional month of lost rent during an eviction. In tight rental markets, you might run 5%. In softer markets, 10 to 12% is more realistic. Repairs and maintenance budget 8 to 10% of gross rent for routine stuff. Leaky faucets, appliance repairs, broken garbage disposals, HVAC tune-ups. That is $128 to $160 a month. Older homes need more. Newer construction needs less. Capital expenditures. Capex. This is the big-ticket replacement fund. Roof, $8,000, $12,000 every 25 years. HVAC, $5,000, $8,000 every 15 years. Water heater, $1,200 every 10 years. Flooring, $3,000, $5,000 every 7 to 10 years. Appliances, $2,000, $4,000 every 10 years. Spread across time, budget 5 to 8% of gross rent. Call it $96 a month for property management. If you self-manage, this is $0. If you hire a manager, expect 8 to 10% of collected rent plus a leasing fee, usually 50 to 100% of 1 month rent per placement. At 10%, that is $160 a month. Even if you self-manage now, include this in your analysis. Your time has value, and you might want to hand it off later. Let us add it up for our Indianapolis example. Taxes, $165. Insurance, $110. Vacancy, 8%, $128. Repairs, 8%, $128. Capex, 5%, $96. Management, 10%, $160. My ski, lawn, pest, etc. 40s, total, $827 a month. That is $827 all out of $1,600 gross rent, or 51.7%. The 50% rule nailed it for this property. But change one variable and the math shifts. Move this same property to Houston where taxes are 2.2% of value, and your tax bill jumps to $330 a month. Now expenses hit 62%. Move it to a newer build in Alabama with 0.4% taxes and no management, and expenses drop to 30%. The lesson? 50% is an average. Your job is to figure out whether your specific deal is above or below that average.